Hey guys, thanks for joining me. Well, the market's closed now, and you can see the Dow Jones down on the day, about 100 points, 13,251. Alcoa is a big contributor down today, as they may be downgraded to junk status. Transport still bucking the trend. They had a kind of a breakout yesterday. I'll show you that in just a minute. Up about 20 basis points. Semiconductors up on the day. Russell 2000 flat on the day. And mid-cap's pretty flat on the day. Financials down a little bit, and you can see the S&P down as well. So overall, when we kind of digest what happened today, the volume was about 7% lower than yesterday. So we have a big burst yesterday up on the markets, give some back today, yet overall, if you look at the advanced decline, it was just about even. So we've had a lot of stocks that were up on the day. So don't be necessarily fooled. The Dow down being 100 and even the S&P being down 11, it wasn't as bad as it looked, and we did have volume contracting on that. So down volume was only 59% of the total volume, as opposed to something like 80 or 90%. So it wasn't really a horrible day. I think it's maybe the pause that refreshes into the end of the year. Of course, people trying to basically discount whether or not a deal will get reached by the end of the year. And today you had John Boehner spoke very, very briefly after the president spoke. President came out, answered some questions about gun control, and then we went into talking about the fiscal cliff. And of course, he said if the Republicans basically do what I say, then we can get this deal done pretty quickly. That's kind of what I heard. And then Boehner came out, and they had all the mics set up and ready for this. What's he going to say? What are his statements? And it was like a minute long, maybe. And basically, took the tennis ball and hit it back in the proverbial court of the president. And then Nancy Pelosi came on TV, and after the bell, the president is telling business leaders and different people that the talks are regressing. So, the odds of this getting done by the end of the year still look slim. And we've gone through our case for why we didn't think this is going to happen by the end of the year. We had a situation where, of course, these people don't want to be on the record for tax cuts, and we talked about that where, tax hikes. They wanted to be on the record for tax cuts, so they may let this expire. Rates go up. They came in and cut them a little bit from that new level, thereby, being on the record for tax cuts. That's one reason. Also that neither side wants to give until they absolutely have to, and they don't really have to until after January 1st. So, the market's baking in that a deal will get done, or it could be baking in that it's really a non-event. It's been going straight up. So, who knows? I think, though, this is setting up as kind of a buy the rumor, sell the news, right? So even if a deal does get done, I think we're setting up for a sell-off. This stock market, when you look at the pattern for this year, has been just lockstep with what a typical election year looks like. You have a spring sell-off, March, April, May sell-off, which we did. We had kind of a May, June sell-off. Then you came back and we had a summer rally. Then we had a pretty nasty fall sell-off, about 8 or 9%, which was this period right in here where the S&P fell 8 or 9%. And then we rally into the end of the year. That is a very typical election year, and it's working out just as it, quote-unquote, should. Now, if you look back at post-election years since 1900, generally they have a January, February sell-off. And I think that may be something that we see. And I think at that point, it could actually be a very good buying opportunity. This fiscal cliff right now, if you think about it, they're going to do something, right? Taxes are going up, but not everybody's going to get what they want, it doesn't look like. So there's going to be some compromise. And it's not going to be this big transformational deal that changes the path of the U.S. and we're back to fiscal responsibility. That deal's not here. It's not now, and I don't know when it will be. So we kind of know that's what's in the cards. So if they don't get a deal done by January 1st, the stock market sells off. It's already run up. It's overbought right now. It pulls back. And then I think they get something done, retroactive. And then we have some struggle there. And then I think that might be a good buying opportunity because, again, I don't know if anything's necessarily going to change if we go over the cliff. So, instead of betting your financial future over whether or not we go over the cliff or not, you got to look a little past that, but realize right now that, we had some trouble, technically speaking, at this 50-day moving average, a couple times. Then it busted on through, came back to it, and rallied up. If we look at all the different indicators we look at as sentiment and all those different things and put-call ratios and all of that type of thing, we are overbought right now. And it does make sense that the market would at least attempt to go up to this, old high somewhere around here before it was to give something back. So it's setting up for a finishing the year rally, and then maybe some type of more significant sell-off after the first of the year. But I think what you have to do right now is stay in the game, take profits when they're there, use some stops if you want to do that. And I sold a big energy name today, and it had a nice run, but it was a trade. I held it for a little over a week, and it went up about 11 or 12%, and we sold it. So I think those are the types of trades you have to be doing right now. But generally speaking, I will tell you this, that the market is probably a little stronger than most people think. I think they think it's kind of just floating up right now. It's actually going up with some intensity. You have financials participating. You have technology participating. You have transportation leading. Those are all very good signs. And you have interest rates going up, showing that money has been coming out of financials, coming out of bonds and into the stock market. In fact, if we take a look at 10-year yields, you can see we're right at resistance right now. So for those of you who are looking, this is what I'm looking at. So, we came up here, came down, came up here, came down, came up here, came down, and now we're up again. So again, if I was a betting man, which I'm not, but if I was, I would say that we would start to come back down again. You only think that interest rates would be going up significantly if economic growth is really, more than people think. And remember, we still have people calling for recessions, but we have China coming out with some decent news lately. Greece got upgraded yesterday, and so the market seems to be in the last week or so pricing in a better and rosier economic environment. Therefore, it makes sense that rates would go up and stocks would go up. Money coming out of bonds going into stocks. The yield curve is steepening, meaning long-term rates are going up while short-term rates are staying where they are. And so the spread in between there is why you see, the financials doing what they're doing, which is breaking out to new highs. I am long financials, been long in financials a couple of months, and they're breaking out to new highs. Again, that's a positive that the market is recognizing that the yield curve steepening. So there are some good things going on, but again, I think it's setting up for some type of, running up right now. And even if a deal gets done, you still may be shocked that the stock market sells off. May have an initial jump, but just like the stock market sold off after Ben Bernanke. Remember, QE3 was right in here somewhere, and that was kind of the peak of the market. I think it was this day, and then we ran up the next day and then closed, and that was the peak. We're just now going above that. Here we are, 3 months later. So I think that, we could see a buy the rumor, sell the news. I want to spend a little time on the potential gun control that's coming up. I had mentioned on Twitter a couple of weeks ago that I had bought, a few weeks ago, I don't remember exactly when it was, that I was buying a gun manufacturer. And I was stopped out of that position after this horrible incident in Connecticut. And this whole gun control issue is very reminiscent to me of the BP oil spill. I think this is President Obama's chance to get the gun control that he's always wanted, and I think he's going to have enough. I think he's going to have enough momentum and enough, public backing to where he may get some of this put into place. My personal opinion, just like the plane isn't the issue with terrorism on 9/11, it's the actual terrorists. This is kind of the same deal for me. I don't think gun control is going to actually help the situation. I don't know if people should be running around with machine guns, but I think overall gun control is probably not going to be the solution. I think something like a campus, almost the equivalent of an air marshal, having campus marshals, retired grandfathers perhaps that stay at school all day with a gun. I think that's a deterrent in and of itself. But there's a lot of opinions here on what should or shouldn't happen with gun control. The bottom line is I think he's got enough momentum behind him. But this reminds me of the BP oil spill. Remember, British Petroleum came out. they had the leak. The stock started falling. Everybody thought they might go out of business. They said, yeah, but their dividend yield's so nice. And I was on record as saying they could cut their dividend. And that's exactly what they did. They actually eliminated the dividend. And the stock just continued to fall, went all the way from 60-something down to the 20s. I mean, it was just a horrible fall. And yet, you know, some analysts were saying, look, this is a company with tons of cash flow. They're doing fine. But that was Obama's chance to say, aha, you see, this is environmentally horrible. We need to ban drilling. And I think this gun control this is going to be his aha moment that we need gun control, and I think he'll get some backing this time. So it's got this momentum. So the gun stocks, I got stopped out of one of them because I had to use discipline and say, even though this company is generating tons of cash flow, it's a fundamentally great company, and there's going to be some gun control probably. But the thing is, I think there's I think a lot of people are going to be buying guns around this time of year. Not only after the election we saw that, but just talking to people that own gun shops and seeing what's going on, I think the earnings are going to be great for the gun companies the next quarter or two. However, having said that, this is a long-term potential structural deal that people are trying to figure out, well, how's this going to affect their business long-term? I mean, you can see what happened with BP. At some point, when people figured out BP is going to cap the thing, the stock went from 26 bucks here all the way up to 49. Huge move. But here's the thing. Look what's happened since then. BP has continued this basic downtrend, even with a 5% yield. BP continues to fall. And, because it's got this bad public, the PR issue around this was really bad. And it could be the same thing for these gun stocks. But I do feel like there's going to be a big rush. I think there's actually going to have great earnings the next quarter or two, especially for people who say, I need to get a gun now because gun control in the future is going to be a problem. That was the original premise for buying it. Fundamentally great company, but was stopped out because this is a big headwind right now. And you have a lot of people that are going to be backing this. So we'll see how it shakes out over the next few weeks. But this, to me, kind of looks like the BP oil spill. Here are the transports, and as you can see, they are breaking out. We can switch this to weekly, and you can see it a little better. They'd kind of been moving sideways. Things are getting a little tighter, and they broke out this week. So again, another positive for the market overall. If we go through some of the companies in the actual transportation index, remember there's 20 of them in the Dow Jones Transports. Delta, of course, with a lot of the airline stocks have been doing very well lately. Conway, United, Kirby Corp, Alaska Air has been on a tear. FedEx had a really nice day today, although when you start to see these, they call these hairy tops, and unfortunately, sometimes you know what these are called down here. If these are hairy tops, what are these called? Yeah, I'm not even going to say it. Landstar, UPS, bumping up a little bit. JetBlue on a big run. Expeditors International, Southwest Airlines, C.H. Robinson, Matson, nice little move there. GMT, Ryder Systems, J.B. Hunt, Norfolk Southern, Kansas City Southern, United Pacific, and CSX, the rails. So you can see the airlines have been a big reason why we have been seeing this move. And IYT is the ETF for that. I don't own it right now. What you really want to see on some type of breakout like this, if you're looking to buy this and you think it's legit, you got this big move, broke out, obviously right here. You're looking for some type of retracement of this move, whether it's a third of the move or a half of the move or whatever it might be. This moving average, of course, is going to keep going up just by function of math. So you may look for it to hit there, and then that would be your buy point right here. And that would be the point where you would buy it. And then obviously if it did that, then your stop could go somewhere underneath here. So transports have been something that they've been not very correlated with the market at all. You can see the gyrations the last several weeks has been all over the map, but they definitely did break out here recently. All right, I'll leave you with this one. Herbalife is the disaster of the day, down 12%. Herbalife came out this afternoon that Bill Ackman, who is a hedge fund manager, basically came out and said he's been short Herbalife. He had a bunch of negative things. Said he's been studying the stock for a year. He thinks it's a horrible company. It's it's going to zero, I guess. This is one of those dangers of owning A, an individual company, and B, why you should own a piece of a company and not have a huge part of your net worth tied up in one company. But here's the thing, Herbalife, what's interesting right now and kind of the controversy around this is that the options market, there's been a bunch of put options that have been purchased in the last few weeks and months on Herbalife betting, which means basically somebody using a little bit of money as leverage to control a big position, betting on the stock price going down. Why is this interesting now? Because these options expire on Friday. Okay, well, Ackman comes out today and says he's short the stock, and he's given a presentation on why he's short the stock tomorrow, which is Thursday. So the CEO believes that there's some funny business that a lot of these hedge fund managers, they come out and basically talk their book. They say, hey, we're short. Everybody respects them because they've had great track records. The stock goes down, and then they cash out of the options right before and they're in the money, by the way, so these options will have value on the expiration date if the stock stays down here. So you're going to hear a lot about that the next few days, and what's interesting is this is kind of the equivalent of marking up now, where these big prominent hedge fund managers can say what they like, what they don't like, right before the end of the month, end of the quarter, right before expiration of options, and they can really move a stock. And it's kind of tricky. Do you muzzle these guys? What do you do that owns so much of the stock they can kind of move it? But that's what happened with Herbalife today. I don't own the stock, don't have any position, but I just thought it was interesting because you're going to hear about that the next few days. Not only that the timing of this, but again with this options issue going on, does look a little flaky. All right, everybody, have a wonderful evening. Don't forget KarlEggers.com, free subscription up in the top right. We also have a Twitter feed, twitter.com/Karl Eggers, KarlEggerss. We have Google+, Facebook, money management websites, eggerscapital.com. Thanks and have a great evening.